Thank you so much for joining us today. And today we're launching our Peregrine Capital newsletter. With this newsletter, we hope to provide you some additional insights into how we manage the fund and try to generate great risk-adjusted returns for US clients over time. And we'll also occasionally give you insights into the overall business, what's happening with staffing and other matters in our business. We're actually starting off with a very eventful quarter one of 2022, and more things have happened this quarter than you'd see in a typical one. We started off the year trying to navigate much higher inflation levels globally, both the US and Europe currently printing around 8% inflation, which is quite surprising given that SA is still at 5.5%. So the higher inflation numbers led to interest rates increasing globally, and also the Fed started hiking rates for the first time in many, many years after COVID. But over and above that, we've had to figure out how to deal with the first war the world has seen on a large scale in many, many years. So these periods are, as fund managers, they are highly intense, highly stressful periods, but they're actually some of the periods that I enjoy most, because you really have to sit there, apply your minds and figure out a completely new set of events and how do we correctly position the portfolios for clients to be protected on the downside, but to also benefit from the specific set of market circumstances. I think as a hedge fund, the last time we were put to this test was in March 2020 when COVID emerged, and I think we came out of that very strongly. We did a great job repositioning the portfolio, quickly moving and taking advantage of the opportunities. Even though the first quarter was somewhat tricky to navigate, I believe we've positioned the portfolio very well for the current set of global environments, and hopefully you'd see that playing out through the rest of the year. So the few things that we've had to think about is which shares and positions are safe to own in a higher inflation, higher interest rate environment. Secondly, how do we deal with this massive squeeze on energy prices given the Russian war in Ukraine and the big impact that Russia plays on the global oil, gas and coal markets. And I think specifically there we found a great opportunity in SA that's provided fantastic returns to the portfolio so far, but has also ensured that if the war continues for a longer period, our fund is actually positioned to benefit from this set of circumstances. And it's one of those interesting periods where it really shows you the benefit of being invested in a hedge fund. Both are smaller size relative to the large long onlys, that meant we could reposition the portfolio rapidly, like we could do in COVID, and also having the additional tool set available of taking advantage of short opportunities in markets, taking advantage of put options and derivatives to hedge the fund on the downside. We've used that full hedge fund tool set to our advantage in this first quarter, and I think it leaves us very well positioned for the rest of the year. So I'm not going to give much more away. You'll find some great additional content in the quarterly letter. I really hope you enjoy it, and please send us your feedback. We're going to be doing these every quarter, and I look forward to chatting again after the next quarter. Thank you.